The following is a production of KYNE TV in cooperation with UNO Television. Consider This with Carol Schrader, a news and informational program recorded on the campus of the University of Nebraska at Omaha. Here is your host, Carol Schrader.
Hello and welcome to the second edition of Consider This, taped today at the UNO campus, a KYNE production. Very proud to be here, and we're going to talk today about banks and credit unions. Now, we're not going to talk about high finance because that's strictly out of my league, but we do have people from the Credit Union League and people from representing the Bankers Association and the bank. Let me introduce to you today first Bob Hallstrom. He's General Counsel for the Nebraska Bankers Association. With him accompanying him, or maybe he's accompanying her, is Leslie Anderson, who's president of the Bank of Bennington. Also with us today is Scott Sullivan, Director of Governmental Affairs at the Nebraska Credit Union League. And rounding out the panel today is Jim Goretzky. He is president of the SAC Federal Credit Union and chairman of the National Association of Federal Credit Unions out of Washington. Now, I could say the reason we're doing this is because next week is National Credit Union Week. Or I could say that we're dealing with a David and Goliath issue. Or I could say that we're dealing with an issue that is an issue of fairness for the people that operate banks and try to make a profit. But what happened this week is there was a case argued before the state Supreme Court. And I'm going to let Jim, who was there in Washington, tell us what the gist of this is for the millions of credit union members, and then we'll give the folks on the other side a chance to jump in.
Well, the case before the U.S. Supreme Court on Monday, October 6th, was one brought on by the bankers in a case in 1990. The bankers and the Bank Association filed a lawsuit in that case in 1990 against AT&T Family Credit Union. That was where the suit was directed at, but they actually had to file a suit against our regular NCUA. And the case involved where the banks alleged that our regulator allowed that credit union to take in multiple fields of membership contrary to a 1934 law.
And what we're talking about basically, and I think people have always said, well, I don't belong to one because I can't belong to one. What you're talking about is that there were limitations that credit unions could only allow certain groups of membership.
Well, not quite. The 1934 law, we believe, is ambiguous and allowed credit unions to take in these multiple fields of membership. But the real issue here isn't about who can join a credit union and who cannot join a credit union. The real issue is a choice for consumers to be able to choose their financial institution. That's the real issue here.
The issue is also, in some respects, survivability, I'm sure. Perhaps for small banks such as Bennington. I don't know about the large banks, but Bob, why don't you tell us why the bankers are concerned about the credit unions being able to sort of spread their wings and allow larger groups of consumers to be members?
Carol, I think Jim suggested that the suit was brought on by the bankers. The suit was brought by the bankers. The suit was brought on by what we believe to be a clear violation of federal law by the credit unions involved in this particular case, and even before that by the regulators, the NCUA, authorizing and allowing credit unions to expand and grow far beyond the bounds of what Congress originally intended for credit unions to be able to do. What we had in the North Carolina AT&T case is a situation where a credit union has grown to the extent of over $500 million in assets. They have over 300 unrelated member groups that belong to that credit union, and they have locations or facilities almost entirely across the nation. It's not the mom and pop credit unions that you traditionally, back in 1934 when they were created by congressional mandate or authorized by congressional mandate, not the mom and pop credit unions that most people think about when they're thinking about a single employer group or a small credit union. In fact, what they've done is they, through the regulators, have been allowed to have multiple unrelated employer groups under one credit union setting. And we see these as the credit unions that are engaging in what you might refer to most commonly as unfair competition.
Okay, I think competition is probably at the crux of it, one way or the other. Scott, obviously you want to be more competitive in one sense. I mean, everyone wants to be more competitive no matter what market they're in.
Sure.
The banks see you perhaps as serving, in a sense, a different market. Who do you see yourself serving?
Well, Carol, I think it's important to put it in perspective. Credit unions in Nebraska at least serve about 3% of the financial services marketplace. Banks prevail dominantly and have a major force in the consumer and the commercial credit marketplace. Credit unions are just out there to provide the average consumer with a place that they can go and get good loan rates, good savings rates, and we're not out there to take over the banking industry like the Bankers Association would have you believe. We're just out there to provide consumers with an alternative, a not-for-profit alternative that we feel is important, and 355,000 Nebraska consumers feel it's important, so that's what we're continuing trying to do. As far as the competition issue, like I said, credit unions do provide competition, but it's not the competition that the other side would like you had to believe that we're out there going to take over them anytime soon.
Well, let me ask Leslie. Bennington's well, it's becoming more urban by the day, sort of part of the Metroplex, but I'm assuming that you have one of the smaller institutions around and probably represent folks in Bennington and some of the farmers around the area and whatnot. And do you personally, as president of the bank or in your position, feel that credit unions are a threat or not in their right place, so to speak? And I don't mean that in a condescending way.
Yes, we compete on a daily basis with the credit unions that are in the Omaha metropolitan area for a variety of services. And I would say that our biggest feeling is that we don't mind the competition at all. We would just hope that the larger credit unions who are now operating really like banks and are trying to get all of the privileges of being a bank, to also sharing the responsibilities of being a bank.
Okay, let's talk about that. We've got the national, the NCUA, and then we have the FDIC, and we have all these different sort of protectorate agencies, and then we have banking laws and things that you have to do, accounting things that you have to do in order to be kosher in the world of consumer banking and thrift. Do these people have to do the same thing that bankers do in terms of what's required to be legal?
We would suggest, Carol, that there are a couple of primary areas, and it's kind of in a looking at the credit unions, and admittedly, I don't think this is about all credit unions going away or all credit unions having to change the rules of the game. There are many credit unions that are following down the road of their original mission, and that's what they were intended and designed to do, and they serve a very useful purpose, and they are out there competing on a reasonably equal or level playing field. It's as certain of these credit unions or segments of the credit union industry become larger and larger through the expansion that the federal and state regulators have allowed, that you see what I referred to earlier as the unfair competition coming in, primarily based upon an attitude of they want their cake and eat it too. In other words...
No, wait a minute. Yeah. Wait a minute, though. I remember the fight over multi-state banking. I remember banks wanting their cake and eating it too. Over the last 25 years that I've been in news, there have been battle after battle, and we've seen the small banks in Omaha and throughout the state gobbled up by the bigger banks. And so now you're kind of saying we don't want any unfair competition.
No, I think what I was going to close up with on that issue, Carol, is where the unfair competition stems from. This is not within the industry. This is the fact that credit unions are not subject to federal taxation, and that's probably costing the United States government what many people probably don't realize, about $1 million per year in taxes foregone because of the tax-free arena in which the credit unions compete, and that obviously is a major portion. I think any banker would say, we think we have a right and a responsibility to pay our fair share of taxes, but boy, what a fine, fine world it would be if we didn't have to pay those taxes, and we could probably provide a little better consumer products and consumer pricing if we didn't have that additional burden or cost associated.
So that's the main unfair competition.
That's at the crux of it.
Okay.
Yes.
Well, I'd like to comment about that if I could. First off, taxation and field of membership are two completely unrelated issues, at least the way we view it. First off, the Federal Credit Union Act was passed in 1934. It wasn't linked to the tax exemption at all. As you well know, Bob, that tax exemption was granted long after the field of membership. I think it was 1936. So they are unrelated at all. One was not predicated on the other. That's the first issue. This isn't about taxation. This is about consumers having the right to choose their financial services provider. It isn't about taxation. And you bankers, the banking industry, that's what they want. But it isn't about that. It's about consumer choice. About bigness. Let's talk about bigness. Do you know that the largest credit union in the United States doesn't have multiple employer groups? Did you know that? Navy Federal Credit Union, they serve one group. So it isn't about bigness. It isn't about taxation. It's about consumers having a choice in their financial services.
That's perhaps is that what this case is about, this particular case?
Yes.
But I'm sure
a broader
that you see
issue
that
than that,
there are
Carol.
broader
You bet.
issues. Let's
You
just
bet.
talk about this case, then we'll move to some of the other issues. Now, an appellate court said basically, what? I mean, where does it stand? What did you have to argue? That we want...
Well, the federal law established in 1934 basically said that credit unions could consist of a common bond. And as
humankind is not what you're considering as a common
yes,
bond.
as complex as this case has become, it boils down to the language that says a common bond. We believe the logical interpretation of that and what has been upheld to this point by the Court of Appeals and is being considered by the Supreme Court is that A means single. And so you have a single common bond of related employer groups that can bind together. All of the dry cleaners in a particular area may say that we want that to be our employer group, not a group consisting of funeral directors and minor league employers or minor league umpires and, you know, who laid it. North Carolina AT&T has 300 different employer groups that are under one umbrella. And we feel that that clearly goes beyond the intent and plain language of the federal statute.
How soon do they think the Supreme Court will rule on this? I mean, they can... Spring. I've heard as early as December.
Yeah, they could possibly rule before the end of the year, but it's probably going to be early '98 before we get a final ruling.
I guess Bob's right in that area. This is a statutory issue versus a constitutional issue. There's two issues involved, one of standing, one of merits. So they would take a little bit longer on that issue than one just of merits and less time than a constitutional issue.
Now, if the Supreme Court should decide that the law as it stands means a field of interest, you folks are ready to fight this in Congress and get the law changed. Is that right?
Correct. Currently, we have a bill, H.R. 1151, working its way through Congress. We have, as of today, 125 co-sponsors have signed on, members of Congress saying, yeah, I want to come on board with this bill because it's a good thing for credit unions, it's a good thing for consumers, and put me on board and let's get this thing moving. We've had some problems on Capitol Hill because it is in the courts. Lawmakers are saying, well, it's in the legal arena, let's let it do its due course and work its way through there. And as soon as they come to the conclusion or decision, we'll take a look at it and do some things on Capitol Hill if we need to.
You know, taxation, though, looking at other issues, and certainly that will be discussed if they don't get their way in the Supreme Court and it comes before the Congress. But I can certainly see that it's like we don't have to deal with it. Maybe we could deal with the other competitive issues, you know, like a board of directors and stockholders and that maybe. But you know, this tax thing does not put us on an even playing field. And yet I'm seeing not-for-profit hospitals for years and years and years. Most of the hospitals were run by various churches and benevolent associations, and then the for-profit came in, were taxed, and they seem to be making a go of it. So you know, help me out on this.
Well,
one.
I think historically, you look, you know, we've got other mutual savings banks, for example, somewhat similar in terms of the mutual ownership aspect that credit unions go forward under. When Congress initially established them, they had a tax exemption, but over time we saw that they became more and more bank-like in terms of not only the size of the institutions, but the products and services that they could offer to the consumers. And finally, Congress said enough is enough. And we're asking, and I think we're going to be asking if we get a favorable result from the United States Supreme Court, that in response to H.R. 1151, that the time has come for Congress to sit down and take a serious look at that tax exemption for those credit unions that have gone far beyond the bounds of what they were originally intended to do.
You can see that happening.
We sure can, and it's something that the bankers have tried to do year after year. Taxation.
And maybe it's fair.
Well, it's not fair from the sense that credit unions are cooperatives, not for profit, as you mentioned already, and just like other nonprofits and cooperatives, there's no profits to tax. Credit unions return all their excess funds back to their members. The members do pay income tax on those dividends and such that they receive.
But so do the people that make
Certainly.
a gain in the interest. You call it a share or
Right.
Sort of thing. But if I make so much at your Bank of Bennington,
do.
Leslie, the IRS knows about it. You
Absolutely.
Make sure that you have no choice.
Let me just make a little comment about this taxation issue, although it's completely, at least in my,
Separate from the case. I know.
it's separate from the case, separate from the consumer having a right to choose their financial services provider. But interestingly, the banks have just recently gotten some legislation which allows them to be not taxed, i.e. the Subchapter S status, which was just recently passed. So, they don't pay as many taxes as they would lead people to believe. Secondly, as far as powers are concerned, I believe the Comptroller of the Currency, let's talk about laws that were passed back in the 30s, the Comptroller of the Currency has granted powers to banks far beyond the original intent of Congress when they passed the Glass-Steagall Act. And I think Bob can talk about that particular issue as far as the regulator granting powers beyond the original
And
charter.
there's nothing differential in that environment or that arena than exists right here. Some of the other industries, the insurance industry, for example, where the comptroller has given national banks what some feel are expanded insurance powers, have been challenged. Litigation ensued, and the Supreme Court has upheld many of the very powers that Jim refers to of the OCC granting on unanimous opinions. If the Supreme Court comes out with a unanimous opinion in this case, then we'll have the lay of the land and we'll go forward from that point. I don't think there's any difference in terms of saying if someone has pushed the envelope, somebody might challenge it. It's been upheld in the banking arena where Jim is suggesting these, that's yesterday's news.
Well, we're
Supreme Court's
talking about
considered it.
economic evolution in a sense here. We saw the savings and loan industry after the debacle there, sort of, and the banks sort of grapple, and more savings and loan trying to find an identity again, and after dealing with so many of them going under. What if I were to say, though, I belong to a credit union, and I also have Bernie, the wonderful banker at Norwest, that I count on to keep me from being overdrawn. I mean, I use them both, and then I have a mortgage company that really owns my house. I know that the share money that comes back to me as a credit union member, I look at that personally as not getting that money back, but that it's sort of like I pay this up front, and then it's sort of like a rebate. We're all getting together and banding together to see if we can, in an economy of scale, loan and borrow from ourselves. And then, but the bank, I'm not against capitalism, but there are stockholders that get that money, and we're, maybe a credit union is just keeping it for our members rather than earning it. You know what I'm saying?
Well, I understand exactly what
loaning
you're
it
saying.
to ourselves in a sense.
Sure. I understand exactly what you're saying, and forgive me if I'm wrong, and you may be able to correct me on some numbers, but I believe that last year, after paying their dividends on their share accounts, there was about a $300 billion reserve in the not-for-profit credit unions. Now, that $300 billion reserve could have created up to $1 billion in taxes.
I think total assets of credit is about $336 billion, so your number's a little bit off because obviously we don't have everything in reserves. In contrast, the banks' total assets is about $5.6 trillion as compared to $336 billion, 17 times larger. Your industry is 17 times larger than us. Let's do a little bit of comparison. The banks have grown more in 1 year in the United States, in 1 year this last year, than the total assets of the credit unions since they were formed. So I mean, you talk, we're very small potatoes or very small players in the marketplace compared to to the banking industry.
But obviously they're a threat.
Well, when you're looking at the size of some of the credit unions that are involved, you bet. I mean, they're out there acting, walking, talking, and thinking like a bank, and having these competitive advantages. Interestingly enough, you referred when you started this dialogue about the fact that you're loaning from one another. And that's at the very historical core of this issue. When credit unions were established, they were established for people of modest means that could borrow, in essence, from one another, and the internal incentive to pay back was very great because you had a single employer group. You were borrowing from one another, in essence, and by gosh, if you didn't pay it back...
we all saw It's a Wonderful Life.
And a little bit different context, but that's where we started from, and we've evolved into the area where in places like North Carolina, we've got thrifts that are major players in the market. Jim can talk about his growth when you look at the collective size of the industry, but the growth on an annualized basis, I think the figures I saw where the credit unions are growing at 12%, the banks have grown at 5% on an individualized basis, so you can use those figures for whatever you want to.
And you can go over long after I'll be here, and maybe you're worried about a future time. But I do know that Sac Federal Credit Union has been pretty aggressive since it has opened up its membership. Radio commercials and I don't recall TV, but newspaper. I mean, I know that you've been aggressive. I've heard your message through the media. I don't know which one.
Well,
but you're soliciting not having to pay taxes from a much broader membership base than just servicemen, retired servicemen and women, and their immediate families.
Well, I'm talking just. I don't want to get this into Sac Federal Credit.
No, but I'm using them as an example. You happen to be the honcho.
We we're a community charter, so directly we're not affected by this. We serve those people who live or work in Sarpy County east of Highway 50. That's under a separate section of the statute as compared to the occupational charter, which we're talking
Firefighters Union Credit Union, to which I belong. Or
up until SAC went away, quite frankly, we primarily served people that were stationed or lived at Offutt Air Force Base. Obviously, with SAC going away in 1991, we needed to look at something from a safety and soundness standpoint, a loan for our insurance fund to provide that continuity of membership. Otherwise, there could have been some real stress placed on the insurance fund if institutions like ours did not provide services to other groups. And we chose not to provide services to other groups, but to form a geographical charter, which was submitted to our regulator and approved several years ago. So
Scott's dying to talk here, but I don't want to not give anybody a chance.
I think going back to your original point when we got this whole discussion started, where you said that you belong to Omaha Firefighters, you belong or you're a customer at Norwest, and that's really what this whole thing is about. You choosing where you want to do your financial services, conduct your financial service business. It's your money. You're going to go where you get, as a consumer, where you think you'll get the best deal. And that's what this whole thing gets back to. We're just saying that it's not a fight against the banks, it's not a fight against the credit unions, but it's a fight for consumers. You choose where you want to have your financial services conducted, and if people don't want to use credit unions, and there won't be credit unions. But naturally, there are credit unions for obvious reasons. So that's where we really think that this is going, and that's why we're spending so much time in trying to get this thing passed.
Well, this, Leslie, is going somewhere. I mean, this is an ever-evolving business, more so telescoped into the last 20 years than perhaps all the history of bankdom and credit unions. It's a very competitive market, and making the buck is a little harder maybe than it was before, although banks seem to be doing okay. But you're in Bennington. I don't know if that's a different picture.
No, it's really not a different picture, and you're right. I think banks are doing well, and so are credit unions, and so is the financial services industry as a whole.
Yeah, ever since you could get me to get a debit card and have those credit cards,
I think everybody's doing well, and we're just looking to it as an issue of fairness, and let's be all on the same playing field if we're going to be doing the same things.
I guess the question too is this just fairness or protectionism for either or both of you? And is this going to be the argument that happened in the Supreme Court, although that's a legal technical issue, and maybe what comes down the road, if not in this Congress because of this issue, but certainly other ones?
We think it's about competition. We're not asking Congress to say you can only join a credit union. We're not asking the courts to say scale back, the customer base of banks. We're saying this is about consumers. Let them decide whether we'll let the free market decide.
And if you put two convenience stores on corners competing with one another, and one of them doesn't pay any taxes and the other one does, I think you can get the picture on how the situation arises and what we see long term as being a significant competitive advantage. People worry about unfair competition when government is providing services in competition with private enterprise because of some of the subsidies and direct or indirect advantages they have. Same story here, Carol.
Well, I can see the tax thing becoming an issue no matter what happens. Where you've had churches and their tax-free status, you have that separation of church and state thing. That seems to be sacred, excuse the pun. But certainly not in this field. Might you be able to hold on to that? I mean, it will be an issue of the future.
Well, the credit unions that have stayed true to their charter, who are supplying credit to a defined group of people and so on, I think have every right to maintain their tax-exempt status. That's what they were chartered to do. That's one of the reasons they were granted a tax-exempt status.
Get people started in the credit business and build up the credit.
And they have every right to do that. It's those institutions that are acting like banks that we would rather see
the ones
compete
that
with
get
us.
your hair standing on end.
Going back to the legislative history of the act, the law was not passed to protect banks or provide protection for banks. The law was passed to enable credit unions to grow. And if you look back at the legislative history of the act, that's what it was passed for, not to protect banks from this competition.
We've just got a couple of seconds left. I'll give each side one more comment. You can draw straws here real quickly.
I just beg to differ. I don't think anything in Congress, all the changes of expansion have come from the federal regulator for the credit unions. I think if their purpose goes away with SAC being closed, they've got options of merging with other credit unions and so forth. It's not just, I need to grow, I need to grow, I need to grow. We've got consumers that need to be served. If they can be served through a merger or some other alternative, so be it.
I think the regulators just took some initiative there. Go ahead.
The bottom line is, and Bob talks a lot about credit unions and all their advantages, but if banks really thought we had it so good, you'd see a lot more banks converting to credit union charters. It's not something that's hard to do, but for obvious reasons that they like the situation that they have, and that's what they're going to stay with. We like the situation that we have, and that's what we prefer to do. We just wish that we could, settle these differences and just allow consumers to choose and have a choice. It's their money.
Well, it's all of our money, and we will continue to talk about it in the future. I want to thank Jim, Scott, and Bob. How could I forget your name and Leslie? Thank you for joining us. The credit union issue will stay alive, and the banks, I'm sure, will stay alive. Thank you for joining us on Consider This.